So I said last time we talked about this, and I told you that we can call the support zone the demand zone. We can call the resistance zone the supply zone. Do you remember supply and demand now? Yes, in economics we call it supply and demand. Now it is very important for you to understand this point because it gives you a clear picture about what is happening in the forex market. The major movement you see in the forex market is humans' emotions. And human emotions, when we sum up humans' emotion, when we sum it up, we would either have supply or demand. We'll separate it from two different set of emotions, that of the demand and that of the supply. So the resistance shows that there is supply. There is so much supply at that region. And what happens when a particular asset is saturated? There's so much supply of a particular asset. What happens to it? What happens to that asset? Does it go up or it comes down? When it's saturated, you have what, let's say there's a particular product that is everywhere in the market. What happens to the price of that product? The price begins to fall then. So that is why we call that resistance. So people who have already bought those assets will start selling because for them that asset is needs to be sold because it's at a price where people can no longer buy it. It's overly saturated. So the same thing happened in the forex market. Now, what happens when there is a high demand of a particular asset? Let's say that asset is very scarce and the demand of that asset is very high. What happens to that, the value of that asset? Does it fall or does it rise? It begins to rise. That is what we call the support. So whenever price, remember what I told you about price. Price is still that candle. So when candle moves down to that support region, it means it has moved down to where there is lots of demand. And where there's a lot of demand, there is a high chance that the price is definitely going to increase. Okay, so when market moves to a resistance region or zone, there is a high chance that that price will start falling because there are lots of, I want to introduce something to you that I introduced last time to you. When price goes to a point where there is resistance or there is supply, it means that there are lots of sellers over there. Okay, there are lots of sell order. That means people, I'm trying to I'm trying to transcend. I'm trying to put you into what happens in the forex market. So when price moves to a resistance region, it is filled with lots of sellers. It means that lots of people who are on the trade, they've placed a sell order. That means they've said, if price moves to this region, sell for me. Some of them have pending orders, sell pending order. So when price gets to that point, market will always satisfy it. The job of the market is to search for where there are orders and fulfill it. That is the work of the market. So what the market is doing every day is to move towards areas where there are orders to be fulfilled, and it will go down there and fulfill it. So if it goes to that region and there are lots of sellers, there are lots of order showing that these people, they want to sell their assets, it will collect it. It will just do what they want. So the effects become strong when there are lots of people who wants to sell. And that was what I told you last time, that if we have 50 people in the market who are trading, only 50 people in the market who are trading, and 40 or 30 of them are ready to sell, that asset has no choice than to fall. You understand? Hello? Good. So if the high percentage of people over there wants to sell, the price is definitely going to fall. That's the psychology of the market. Then when we have 50 people in the market and about 30 or 40 of them wants to buy, leaving the rest 10% who wants to sell, market is going to do what? Rise, because there are lots of buyers. There are lots of buyers. So these are the foundational elements that controls the market. So these are the things that majorly controls the market. So as we move ahead, you're going to see how we're going to apply these into what we do in trading. I hope you get that now. Okay.